The next speaker we cannot be more familiar with. He was the morning host. Let's welcome Teare. Keith has been an active technology entrepreneur for over 4 decades. Today, he's the founder and executive chairman of ADV, Accelerated Digital Venture. And he is also a chair of the Internet Committee and then the founder of Venture Network. He is also an author. He authored 2 books. One is Under Siege. Penguin publisher published the book, and about racial oppression in Britain. And the other book is the EasyNet book, published by ITP about the internet. Let's welcome Keith for the speech. Thank you.
Thank you. So, well, I published a book called Under Siege about racial oppression in Britain. Is an important fact because it tells you I'm kind of unusual. I'm a sociology and political science major, and I kind of care about the world we live in. And my interest in blockchain is driven primarily by a view of the future that I believe in. And what I want to talk about today is one particular application of blockchain that I'm working on with a team at Venture Network as a way of talking about a vision or a passion. So as you listen to what I'm saying about Venture Network, don't just think about the application, think about the implications of the approach to many, many different things. So Venture Network, we say improving life for founders and investors and boosting the startup ecosystem. And before I get into it, it's worth saying that, my understanding of blockchain and cryptocurrency is that they belong together. A lot of people say, well, I like blockchain, but I'm not so sure about cryptocurrency. Big corporates tend to say that, and those who have a vested interest in the current economic system tend to say that. I'm a great believer that blockchain and crypto belong together because crypto is the way that the use of the blockchain gets paid for and rewarded and gives the distributed network a reason for participating. And of course, that's only true if genuine value is being created. And we're in a bear market right now where the popular belief is that there is very little value in cryptocurrency, value in the economic sense of the word, that there's nothing underlying it, nothing underpinning it, that it's just points or tokens unrelated to real value. And I don't agree with that. I think that insofar as cryptocurrency captures real value, it itself will be valuable. And insofar as it doesn't, it won't. And so everything I think about is how do you capture real value? And what is value? Well, value is work. When human beings do things and they produce something that didn't exist before, they add value to that thing. In most of Europe, there's a tax called the value-added tax. And you pay value-added tax as a business when you add value to a product and then sell it for more than it was worth before due to what you did. So adding value means doing work. And so a cryptocurrency that has value has to embody work, actual human effort, actual human endeavor. And if it doesn't, it's probably not valuable. Notes and coins embody value because you get paid them when you do work. That's the value that's in them. And so as I think about crypto, I think about tokens that embody value that comes from work. And there is a body of work called venture that I'm now going to talk about. Venture involves really 2 behaviors: investing and building startups. So startup founders and their teams do work, and venture investors and their teams do work. And what if you could have a token that embodied the value of that work? So that is Venture Network. And let's start with just a couple of facts. In the last 10 years, $600 billion was invested in startups by venture investors. And that means angels, it means early stage funds, seed funds, it means venture funds, and it means growth funds. $600 billion was invested. Actually, that produced about 1.8 trillion of exits. So realized exits, about 1.8 trillion. But that was from about 10% of those investments. About 60 billion produced the 1.8 trillion. The other 540 billion is still in stocks, in companies that have not yet exited. So it's value contained within stocks that have not yet exited. And in the next 10 years, if you looked at the similar numbers, and here we show the different rounds, it'll be $1.5 trillion will be invested in startups and teams, and only about 10% of that will exit during those 10 years. The rest will not. So what does that mean? It means we have masses of value contained within stocks and shares that you can't sell. But it's real value. I run a venture capital firm, and on our books, in our accounts, we have something called net asset value. And net asset value is the value of our investments. It's not the value of our exits in cash. It's the value of our investments. So if a company we invested in today at $1 million does another round of investing at $10 million, and then another one after that at $100 million, but it hasn't exited, our investment at $1 million has gone up 100 times, and it's real value, but we can't cash it in. So the venture network, the venture ecosystem is a very interesting ecosystem because there's lots of value, but you can't spend it. Sounds familiar, right? A little bit like EOS. Lots of value, but you can't spend it. Well, what if you could? What if we could change that? And if we could, we'd be solving three problems. Firstly, anyone in here who's ever done a startup, you know that most of your net worth is in the stock of your own company. And you're not liquid on that. Nobody gives you money for that stock until much later when you're successful. And that's also true for angel investors and seed investors, like Tim Draper this morning, when he invested in Hotmail. He couldn't spend his Hotmail stock until Hotmail was acquired by a public company that then had a tradable stock. He wasn't liquid. So the first problem in the venture ecosystem is nobody is liquid. Everybody has paper value, but not actual spendable value. The second is you have highly concentrated risk. What does that mean? Well, if I start a company and I've got shares in my own company and I've got nothing else, I have a highly concentrated risk in my company. And if you're my angel investor, maybe you have 10 investments, you have a highly concentrated risk in 10 investments. You're not diversified. And the third thing is almost all startups run out of money way too fast, and they could do with extra cash in order to last longer, achieve more, and become liquid. So Venture Network is looking at these three problems in an ecosystem that has lots of value in it and asking, could we create a token that would capture that value and be liquid? Could we do that? And we think we can, and we've come up with a way of doing it. I'm going to describe that way, and I think this is applicable to almost any asset class. I'm going to talk about the venture ecosystem, but you could apply this thinking to many, many asset classes. The first thing that we're going to do is we're going to find a way to give the participants in the venture ecosystem tokens in their hands without paying for them, so that they actually have tokens that they don't pay for, but they can spend them. Sounds weird, right? I'm going to give you something, we call it a reward token, and you can spend it, but you don't have to pay for it. How do we get it to you? Well, we've formed a partnership with Crunchbase. Many of you will be familiar with Crunchbase. And we've decided that every company that successfully raises venture funding, starting January 1st, 2018, we will give them a reward that is proportionate to the amount of money they raise. It's a reward token. The way that's going to work is Crunchbase, that's the initiator, will tell us about a funding round. we'll create a smart contract that puts the company name in that smart contract and the amount they raised. And then we were going to give 20% of the amount they raised back to them as a gift. So if you raised $1 million, we're going to give you $200,000 worth of venture tokens as a gift. We're going to ask you to do two things with that. Half of it, we're going to ask you to distribute to your shareholders so they get some liquidity. The other half, $100,000, we're going to ask you to keep so that you can spend it on goods and services. So half for liquidity, half for spending. So then the question arises, well, what can you spend it on? We're going to Amazon, Microsoft, IBM, and indeed every startup that accepts these rewards, and we're going to ask them to accept venture tokens as payment for their products and services, at least in part. So we'll say to Amazon, if you're charging a startup $1,000 a month, please take $100 a month in venture tokens. If you're Microsoft selling the Azure service, instead of charging $1,000 a month, take 100 of it in venture tokens. And by doing that, we're making it possible through deals that the rewardees who get the tokens can spend them on goods and services, adding basically $1 to every $10 they have to spend. And that will be through the reward system. If you can imagine what that does in the big picture, it means that a very large amount of money will be pumped into the ecosystem. And let me give you some numbers. I talked about 2018. Well, in 2018, up until the end of September, $70 billion was invested in seed rounds, angel rounds, and A and B rounds, 70 billion. When Venture Network goes live, we're going to give 20% of that as rewards to the companies funded. So 20% of 70 billion is 14 billion. Half of it is going to go to shareholders to make them liquid. That's 7 billion. The other half is going to be to spend. That's 7 billion. If we're making deals with Amazon, Microsoft, Salesforce.com, and all the other ecosystem participants who sell goods and services to startups, and they agree to take 10% of an invoice paid for in venture tokens, that is $70 billion worth of economics that we have 7 billion to spend against. That would be real liquidity, that would be real products and services paid for in a new currency called venture tokens. So already you can tell this only works if everybody plays. If Amazon says no, Microsoft says no, Salesforce.com says no, GDIS, when you come into a conference, won't take venture tokens in part payment for your ticket, it won't work. But if everybody says yes, we're going to create $14 billion annually in new liquidity going into the venture ecosystem that will benefit everybody, because we'll now have a community of funders and founders of late-stage companies with products and services and startups who are helping each other succeed through a token called a venture token. 10 years from now, we will have added almost $350 billion of liquidity to the ecosystem that currently isn't there. And so everybody wins. And there'll be a roadmap from today that will show you how we're going to do that. It's pretty simple. We've got to build smart contracts that accept feeds from Crunchbase that tell us a company has been funded. We have to mint tokens through that smart contract when the rewards are accepted by the companies. We have to, looking backwards, do the whole of 2018 as what you could think of as an airdrop to everyone who got funded this year. And if we do that, we'll have a massive amount of tokens in circulation that can be spent on products and services with companies we've negotiated deals with. By 2020, we think we'll have pumped $100 billion worth of rewards into the system, and it is only up from there. So if this works, what have we succeeded in doing? Well, firstly, we've created a token that takes the value of an asset class and puts it into that token. The venture token will have roughly 20% of the entire value of the ecosystem contained within it. And it'll be spendable. And because everybody will own these tokens who gets funded, we've created a community. If you take the reward, it's in your interest to accept tokens in payment for your services, because it adds value to your reward. So everybody helps everybody else. It'll be a true community token. It'll put about 4% of liquidity into the hands of shareholders and about 4% more spending power into the pockets of companies. And why would Amazon say yes to this? Well, they'll say yes to it because if you think about it, the people who get funded every year are your ideal customer. That's the future companies who were funded this year. Why wouldn't you want them as customers? And if you accept venture tokens in part payment, by definition, they become your customers. So it's a fantastic customer acquisition mechanism for the big companies to attract the newly funded companies. So we think they will say yes. So that is Venture Token. It's a small team, headed up by myself. Roberto, are you in the room? Come up here. Roberto is a Silicon Valley legend. He goes back to Hewlett-Packard and many other companies. Roberto is running Venture Network, so if you're interested in investing, by the way, we're not doing an ICO, neither a private sale nor a public sale. You cannot buy these tokens from us. You cannot. You can invest in equity if you want, and we're going to sell roughly 20% of the company. It's a Swiss entity to the first investors during the next couple of months, but you can't buy the tokens. We're not doing that. We believe that the day of the ICO is over. We're not going to play that game. We're just going to do traditional equity funding, and the token will carry value. And our investors, by the way, who own equities, will end up getting tokens as a kind of a dividend. So Roberto is running it. Do you want to say hi, Roberto?
Hi. I'm very excited about this project. I think I've been raising money through the venture capital community. I've been in 3 private companies that went public. I've been in 5 public companies, and of course, I've been in boards of more than 20 companies that are venture funded. So every time was the problem with liquidity and how do you get your equity into something that you can purchase and have some purchasing power, and this can provide that for that ecosystem.
And why are you a good guy to be the operator running this? What have you done in the past?
Well, I've been president and CEO of different companies in the Valley. I was a general manager of HP Software, and I've been around the Valley for a long time.
He's the only guy I know that's older than me. Maybe. Guys, that was a lie. I'm way older than him. Okay, thanks, Roberto. So that is Venture Network. I hope you, A, like the idea. B, I hope it gets across this common idea of tokens need to contain value, and value comes from work. And if you can get an ecosystem that is doing the work to agree that the token works for them, then you're really capturing value into a token. And then thirdly, I hope you'll participate either as a company that takes the rewards, as an investor who takes the rewards, and you'll also accept venture tokens for your own products and services. Thank you.
Thank you, Keith.
You're welcome.
That was very exciting news. Yeah. So we will welcome the SVBI CEO to give Keith Outstanding Investor of the Year. Please step here.
Thank you.
Thank you for coming.
I'm very grateful. Firstly, I'm great. Now I'm outstanding. What can you say?
I think you are.
Thank you. Thank you, everybody.